If you are dreaming of that shiny new car or a cozy home in the future, your credit score could play a huge role. But what exactly is this credit score? Let's figure out. We'll discuss what a credit score is, how is it calculated, how it impacts your chance to get a loan, and the 5 major factors that can hurt your credit score. School days. Remember the report card with your scores mentioned in it? Well, just as your academic score showed how well you did in school, your credit score reflects your financial performance. A credit score is a 3-digit number that tells banks and other lenders how capable you are to repay your loans. Technically speaking, it tells the lenders the chances of you defaulting on your loan. Higher the number, low are the chances of default. Banks and other financial institutions use this number to decide whether you are loan worthy or not. In a nutshell, this score basically reflects how well you have managed your credit in the past. And credit here means all types of loans. A personal loan, a home loan, your credit cards, or even the buy now pay later loans, and so on. There are these special companies called credit bureaus. They use your financial data to calculate the credit score. Now, you may be wondering how a company can get your loan and other details. Don't worry, Reserve Bank of India regulates these credit bureaus. All lenders and credit card companies must compulsorily share information with them. They pass your basic details and loan-related information like amount of loan taken, kind of loan, tenor, repayments, delays to special companies every 30 days. These special companies collect and maintain all the loan-related information for all the loans for all the borrowers. Based on it, the credit bureaus generate a credit report and a credit score for every borrower. Usually, credit bureaus look at last 2 to 3 years data to compute your credit score. So, if you had defaulted 5, 7 or 10 years back, it won't reflect in your credit score. But don't you think you can escape? All this information will be available in the credit report. So, despite a wonderful credit score, a bank may still reject your loan application on the basis of defaults in your distant past. So, a good credit score is essential, but a good repayment history is even more critical. There are 4 credit bureaus: TransUnion CIBIL, Experian, CRIF Highmark, and Equifax. TransUnion CIBIL is the oldest in the country. Credit score can be in the range of 300 and 900. And a score above 750 is considered a very good score by the lenders. It shows that you have always repaid your loans on time. And just like a good academic score in school would get you a very good college very easily, a good credit score will help you get new credit easily and at lower interest rates. In fact, CIBIL data says that 80% of the loans that get approved have a score above 750. Interesting, right? Now, if you have a slightly lower credit score, say between 651 and 750, banks see you as an average borrower. You can get a loan but at higher interest rates. Next, if your credit score is between 501 and 650, banks see you as a poor borrower with some defaults in the past. Even if banks agree to lend to you, they will charge a very high interest rate. Next, if you fall in the very poor category with multiple defaults in the past, it will be very difficult for you to get a loan. But what causes a bad credit score? Let's figure out. Well, there are multiple factors that can hurt your credit score. We'll look at the major ones. Number 1, loan payment history. Loan repayment history is given around the highest 35% weight in calculating your credit score. Even a single missed EMI can reduce your credit score by around 60 to 70 points. Next is using too much available credit. So, if you are eligible for a total credit of say 10 lakh rupees and you have consumed 5 lakh in your credit cards, it means you have utilized 50% of the credit. A credit utilization of over 30% is seen as negative for your credit score. Next is applying for a lot of credit in short time. If you inquire for multiple loans in a short time, it shows you are credit hungry, which can damage your credit score. Moving on to defaults. So if you have defaulted on a loan in the past, your chances of getting fresh credit is almost zero. Similarly, settling the loan or credit card account instead of paying it in full can also hurt your score. Next is errors in your credit report. Sometimes there may be errors in your credit report that portray you as a higher credit risk than you actually are. It can negatively impact your credit score. Alright, so by now you know what can hurt your credit score. But what if you have never taken a loan and you have no credit score? Well, don't worry. Banks would still offer you a loan. They understand that new to credit customers don't have a credit history and no credit score. With this, we have come to the end of this video. If you found this video useful, please like and subscribe to our channel and share this video with others as well. We'll see you with another insightful video.